If you're still listening to Jay Powell for reassurance, you are already behind. Every time Powell steps to a podium, the message is the same. We're in control. Inflation is temporary. The system is stable. And yet debt keeps exploding. Purchasing power keeps collapsing. And the fixes, are they really fixes? They're breaking the next thing. This isn't bad policy. It's the end of policy. That's what most people, you can't even say it without laughing. It is the end policy. It is the end game. This has been the game for 113 years. You can't centrally plan your way out of a debt spiral. This was the plan the entire time. This is what's been going on for quite literally thousands of years, from despots, kings, monarchs, dictators, you name it. You can't print trust. You can't fix a broken monetary system with better words. That's the insidiousness of a fiat talking hot air based system, a con game, a confidence game. That's why the real shift isn't happening on CNBC. It's happening quietly in strategy. Institutions accumulating Bitcoin, people exiting broken systems, and long-term thinkers asking a different question. Not how do I beat inflation, but how do I store time without decay? How do I rebuild these systems? We have Elon Musk. Dan Bongino just announced his resignation from the administration. People that were coming into the administration to reboot everything, to fix the problems, whether you believe that or not. And look, they're gone. People falling by the wayside because they realize the system isn't designed to be fixed. The purpose is to bring all of the purchasing power, all the assets up to the top, the few that are controlling them. So how does the average guy get ahead? How does the poor middle class get ahead? For decades, every long-term financial product failed because it was built on and a strategy for what comes after the Powell era. Back in late 2022, the FDIC held a closed-door roundtable where they openly admitted something that most people still don't understand to this day. Most people don't even know about it. 99% of people. The money is broken. The deposits were going to flee. Debt would continue to build exponentially. They knew confidence was breaking, and they knew the system only works as long as people don't start to panic. But we're going to connect some of the dots. We're going to talk about some of the news of the day and position ourselves for success in the future here. And we also have special guest, my friend Jason Leibowitz from Meanwhile. We're going to talk about some of these ways that we can get around all this. And Jason, it's great to see you. It's great to have you here today. If we can get over my internet's freaking out, everything is going on right now. But hey, it's Friday. It's a week before Christmas. Here we are, man. It's great to see you, brother.
Oh, good. No, it's great to be here. Thanks for having me. And I'm always happy to come on and jam about what's going on in the crypto world because it's always something, man. And it's 24/7.
It is literally 24/7. I think it's a great place to start because it's the freest market we have in the world. And Saylor just talked about it. You know, we talked a little bit offline about MSCI, potentially strategy getting delisted. Some of the craziness goes on. We'll get into more some of Powell and just, things of that nature as well. And the FDIC event, which I think is absolutely fascinating, which I really want to get your thoughts on here in a little bit of there's just a roundtable meeting that I've played on my show a few times of them just admitting there's going to be bail-ins, all of them sitting at a table and saying, laughing and saying, yeah, the public has more confidence system than we do. And people are still, every day, just, here we go. It's the people there to actually protect you are there telling you the system is completely insolvent. But so the strategy stuff in MSCI and what's happening there. Saylor just had a podcast recently they did on the Galaxy channel with Alex Thorne, and it's funny. The thing I kind of got out of it was he asked him, I think it was one of the first questions. He was like, what is going on in the market? Like, how come we entered with all this news this year and Donald Trump, this Bitcoin quote unquote president, and now we're the price is lower than it was when he, a year ago or whatever it was when he got inaugurated. And the answer in a way was like, even Michael Saylor has no idea. Like no one has any clue. So anyway, I would love your take and your kind of thought on just kind of where we're at right now.
Yeah. Anyone who knew anything about crypto would have bet that Bitcoin would have been higher at the end of 2025 than at the beginning of 2025 when Trump took power as, like you said, the Bitcoin president. We have all the fundamental tailwinds that you could possibly ever hope for, especially 2 short years after FTX blows up. I guess 2 to 3 years after FTX blows up, 2 years after Operation Choke Point, when Elizabeth Warren tried to debank all crypto companies in the US in May of 2023. And then BlackRock came in June of 2023 to save the day and file for a spot Bitcoin ETF. And that marked the next bull run. 2024 was obviously a great year. 2025, Trump's elected. And yet here we are, lower today than we were on January 1st. And it befuddles me. And it should remind us all to be humble about the fact that this is a massive market, a multi-trillion-dollar asset class, that nobody has a crystal ball. The smartest people have been making predictions. I mean, I think anyone who makes a price prediction should realize that that should be the last price prediction they ever make, because you're wrong. Everyone's been wrong. And we don't know what the future holds. We don't know what all the market forces are doing to Bitcoin and the broader crypto economy, despite all the fundamental tailwinds. So, I think right now we're in a sideways period leading up to the Jan 15 MSCI decision, whether to remove or not MSTR. I think the news that MSTR is going to get removed from MSCI is fairly priced into the market. So there seems to be a ceiling on prices. If it turns out that MSCI does not remove MicroStrategy, then that's hugely bullish news, in my opinion, Jan 15 or Jan 16, whenever that date is. But I think that's kind of one of the overhangs right now, and we're just going to ride that out for the next month or so. And it's just sideways holiday trading. I mean, it's just, take a break, go spend time with people that you care about, and come back in a few weeks to a month, and we'll reassess. But it also, last thing I'll say on this is, this should remind everyone from a Bitcoin-centric perspective that this is an investment. It's not a trade. This is a long-term hodl. It's not a day trade. You're going to chop yourself up with volatility and with trading fees and all the other components that come into the ups and downs on a minute by minute, hour by hour, and daily basis in Bitcoin and the broader altcoin markets. So this is an allocation. It's an asset class allocation for the long term.
Yeah, and it's something that we talk about all the time in the show here. This is, like you said, it's a protocol. It's a money really outside the system. And yes, is the existing legacy system need it, trying to use it in their own ways? Yeah, of course, because that's what happens with protocols and emergent technologies like this. So I think that's what's really fascinating, and what you guys are doing with Meanwhile, obviously, which we'll get into here as well today. But what do you think, just the sentiment overall? Because I feel like you've been in this for what, 13 years? How long has it been?
Yeah, almost 13 years.
Right?
I got into crypto in 2013.
Yeah, and so most people, again, most people are watching this now, that are going to watch this. They haven't experienced all that. So you've seen a lot. A Swiss banker, just like you've seen the gamut. You've seen a lot of things that most people will never see. So I would just love like the sentiment, because it feels very weird that we have all this news. And again, I bring up again how long you've been in this, partly because I want people to know just the credibility you have, number one. But number two, 10 years ago, if you would have had the amount of news just in, like a daily news cycle we get today, if that would have happened 10 years ago, that would have been like the biggest thing all year long. And it was like the one thing you were like hoping for validation of Bitcoin or something. And now it's just like every day we're inundated. So I think a lot of people, we have this feeling of like validation of like, yeah, look, the world's going to see like this is the new money, like this is what we're going to use. But it's been anything but that. What are your thoughts just on that, of just like even the market sentiment? I was just, some of the University of Michigan consumer survey stuff, the business cycle. There are a couple of things here at play that you kind of touch on or kind of go some different angles with it. But I would love your thought on just the sentiment of this bifurcated world that it kind of feels like we're in, where we're seeing news, but then the sentiment, like these things are like really negative, or the Bitcoin price is down. You're just kind of like wondering, like what is happening? Like how come these things don't match up?
Yeah. it seems like every month there's new news of like sovereign wealth funds or huge institutions, endowments, pension funds, you name it, that are allocating for a very long term into spot Bitcoin or IBIT, which is essentially spot Bitcoin because the back end of that is buying of Bitcoin. And so why are we here? Well, you could get into the conspiratorial angle of some of the whales that are able to, they know who they are, they know where they are and how much Bitcoin they have, and they're able with their size to move markets single handedly. And this happens in traditional capital markets. You look at the biggest hedge funds in the world, they have so much capital and leverage to deploy into thinner markets. And, there's certain times of day where market trading is thin. The order books are pretty empty on exchanges across the world. And it doesn't take a lot to move a market. So I think, I'm not going to name names and who the biggest whales are, but there is rumors. And for those who are really in the inside and those in the know, they get it. Like Middle East and parts of Europe and basically the financial capitals of the world, in East Asia, they're able to move their thousands of Bitcoin weight around into these markets to drive prices higher and lower as needed for hard to say why, but I would say this from my general thesis that this is a long-term investment. Lower prices are being met with huge demand. Um, I think that there is a floor to Bitcoin, given all the fundamental news that we've seen and just the general trajectory over the years. I've seen the cycles from 2013 at a couple $100 to 1,200, back down to a couple $100 in 2015, 10 years ago, up to 20,000 in 2017, back to 3,000, back through COVID to 25,000, then 60,000, back to 30,000, 70,000, back to 30,000 to 15,000 to 125,000, back to where we are today. And so there's demand at these lower prices. I would also add that it's a highly emotional market. The FUD, the greed and fear index, is a good thing to just take a look at every now and then on a long-term basis. In highly emotional markets, and this is sort of my training in traditional Wall Street and hedge funds and on the banking side before I got into crypto, in highly emotional markets, looking at price action in charting, technical analysis, is actually very indicative to capturing the human psychology of what people are feeling and thinking. The whole idea of when there's blood on the streets, that's the best time to buy. When you get the long-term believers like me or whoever, when they're like contemplating selling, like after FTX declared bankruptcy or whatever in 2022, that was the low. Prices weren't going any lower. And so you get these periods of time that you really have to be disciplined, where when you feel like oh my God, like I'm scared and I don't know what to do, you have to be able to take that zoom out look and say, like, I think that this is probably the right time to buy if you have cash, if you have dry powder. And then when you're now considering, you're not a trader, but you're like, I should get a second mortgage on my house and buy more Bitcoin. Well, maybe we're near the top. And that's sort of how you kind of have to capture the human psychology. And when you look at the technical analysis, the charts, the charting of Bitcoin, there's a lot of technical indicators that line up so beautifully well, that you can look at just traditional stock market throughout decades, gold and other long-term commodities, and Bitcoin, and you see these news events, these bankruptcies, or the launching of ETFs or whatever it might be, and you just see it lines up so perfectly with the price action and the cycles of Bitcoin. And so there's a lot of emotion in the market, and to try to visualize the emotion in the form of charting actually helps.
Yeah, and it's funny because it's something that obviously there's not a lot of people that have that experience, and it would be, again, not to go down the rabbit holes of what it would have been nice to learn in school, but some of these, just like you said, the psychology of things, the emotions, it would be nice, if more people kind of understood things of that nature. But I digress. What are your thoughts on like gold and silver? I mean, obviously gold and silver have had a real I don't know. I mean, I could say stunning year, but they've
Yeah,
just been beaten down for so long that
like that
I don't
gold
know.
outperformed Bitcoin. I mean, Peter Schiff, goddamn that guy. Um, but silver, no
Dang.
opinion. Gold, um, it's still, listen, we're still early in Bitcoin's life. It is not replacing gold anytime soon. Over time, it will. I have young kids, so do you. They're growing up
Mhm.
with iPads and just, you know, the digital world at their fingertips,
Yep.
and everything to them is digital. FaceTimes and with family thousands of miles away, and apps and the interaction and the immediate feedback of things on YouTube and whatever else, for better or for worse. That's just how the humanity is evolving. And if you fast forward our kids into the future and ask them 20 years in the future, let's say a generation into the future, what has more value to you now that you've having grown up with iPads and everything is just innate almost to them. They're growing up with this nurture, which will ultimately become nature of the digital world and the virtual world. What has more value to you? A physical heavy metal rock called gold, or this digital version of gold that's not heavy, that's immediately transportable and divisible almost infinitesimally? Um, and you ask them that. I in 2025, almost 2026, I have to believe it makes all the sense in the world logically that digital gold is a lot more valuable to them than physical heavy metal gold. Yeah, it's pretty in jewelry and all that stuff, but in terms of what's backing, what are central banks hoarding to back their unlimited money printing of fiat paper currencies with dead presidents on them, and so on and so forth, you have to think the direction of humanity is away from the pre-internet, pre-digital world of commodities, which were physical, and how the fact that the internet and just the World Wide Web has changed everything fundamentally about economies. And it doesn't happen overnight. And while things go viral overnight, and so if you asked me in 2013 how quickly would Bitcoin catch on, I thought it would have been way quicker than it has been now that I've been in the space for almost 13 years. But um, to change the human psychology, and the boomers are still in charge, but
Hmm.
our kids are going to grow up into being CEOs and into being, into government, and their perspective will be much different than the 80-year-old geriatrics that we have running our governments of the world today. And I think that the general philosophy from a Federal Reserve perspective, from a Treasury perspective, and just a general governmental perspective and a CEO perspective will be the digital money. It makes more sense than physical, tangible commodities. And so that's 2025. We're still early. Like, that's the whole point I'm trying to make here. We're
Hmm.
still really, really early. And so gold has had a better year than Bitcoin somehow.
Does it? And I don't know if you can see the screen, but I just pulled up
Yeah.
a chart of like Bitcoin price, and this is all in fiat terms. Like the blue line goes up and to the right, and it's just the stock market basically priced in dollar terms, and then the orange line uh, is Bitcoin. So everything priced in Bitcoin basically, and it's crashing, and then which obviously everything crashes against Bitcoin long term when priced in dollars, and then the or I should say, sorry, I'm priced in Bitcoin. And then the white line is consumer sentiment, and then the gold line is the gold price. So anyway, it's
What time frame is
interesting.
this?
This is over the last 25 years. So this is over the last 25 years,
And
basically.
everything, so everything is priced in Bitcoin?
It is. So let me zoom this in a little
Because
bit.
the orange
I
line
can
being
show this
Bitcoin
chart.
going
It's
down.
priced in Bitcoin, yeah. So it's
Okay.
priced in Bitcoin, but then the
Yeah,
blue
things
line.
in Bitcoin are getting cheaper.
Correct. Yeah. So the orange line is everything getting priced in Bitcoin is getting cheaper. And then the blue line is the stock market priced in dollars, though. And so
Got it.
then it's a couple different things. It's from an episode Jack Mallers did a couple weeks
Hmm.
ago, and the whole point of what he was saying, and the reason I screenshot this, I've shared this multiple times over the last month or so, is because he was just talking about we're in a depression, and for years now, I've kind of thought like if when people look back 100 years
We're
from now,
not
they'll
in a
look
depression.
well. My thought is when people look back in terms of seeing what was happening in society, it was just with families breaking apart the last 50 years since we've left the gold standard in essence, right? Like hard money,
Hmm.
some
Since
type
the
of hard
70s,
money.
yeah.
Yeah, and so anyway, everyone knows the WTF happened in 1971. So you've had all this dislocation of the market in that sense. So it's to your point. It's not like, oh, there's the bread lines. Like we have ways of dealing with a lot of that now. That's better than it was 100 years ago, obviously. But it's the numbers. There's a lot of things that are going on there. So anyway, my question for you with all this though is, what do you think about the multipolar world? I've had a lot of people lately that have been saying that they think that the East is going to be more of like a metals base, like gold. Obviously, the central banks there, China and Russia, are really heavy into that. And then in the West, it's probably going to be the honest ledger. It's going to be a Bitcoin world. Do you see that kind of playing out that way, kind of this bifurcated, multipolar world in the future here?
That's a good macro question. Um, I think my general view, and because this chart is such a long-term chart, so I'm going to project far into the future over a long time horizon, decades, that the world's reserve currency, being the US dollar right now, will continue for as long as it possibly can. And the problem with it is that we are printing, it's basically quantitative easing is an unlimited time horizon. Said differently, modern monetary theory, which was basically cemented as the economic response to the pandemic, where you take the US government's balance sheet and you just keep moving the decimal point to the right. No problem, because it's the world's reserve currency and everyone still has demand for the dollar. You can't do that with any other fiat currency on earth. Only the world's reserve currency can do modern monetary theory, moving that decimal point to the right and increasing our balance sheet and printing dollars and stimulus checks and PPP loans and all this stuff. And so that's going to continue for as long as the US government can humanly possibly enable that to continue. Unfortunately, price of eggs is like $12 a dozen. And everything tangibly on a daily or weekly basis for the average citizen of America and probably the rest of the world is going to go up and up and up in dollar terms. The purchasing power of the US dollar, and therefore all fiat currencies, will continue to go down and down and down due to inflation. Ultimately, that inflation is going to be so insidious that people are going to say, this piece of paper with George Washington or whoever, Ben Franklin's picture on it, is worth less and less and less. And you think about it from the net present value of $1 million today. If that's a savings, like in life insurance, and you want to leave $1 million to your family 20 years in the future when someone dies, well, $1 million sounds pretty okay and decent and good today, but 20 years in the future, it might be not that great. And what do you do to prevent that? Well, it comes back to what's the transactional currency that everyone's using. If the piece of paper continues to be less and less valuable, well, we see it in the form of hyperinflation in countries like Argentina and all over the world throughout history since the fiat currency experiment has existed. Weimar Germany after World War I, when they just tried to print Deutschmarks, and people would have wheelbarrows full of pieces of paper to buy bread. And Argentina has been through hyperinflation so many times in their history. People were like the beginning of Bitcoin in Argentina, people who had means would buy Porsches and BMWs, like luxury cars, because they would hold a residual value. They wouldn't even drive it. They would hold a residual value better than cash in their bank account. And then they could sell that car for some dollar amount or peso amount. And so having an asset that is insulated from the human greed from a governmental level, the ability to just print money and hyperinflate your economy away and your purchasing power of your currency away. I mean, that just leads into Jack Mahler's general philosophy, which is also my general philosophy. Spend on credit. We live in America, spend on credit as much as you can. And each month on the 15th or the 17th of the month or whatever, when your credit card payment is due, sell some Bitcoin to cover your expenses, and then keep spending on credit and keep spending on credit and keep spending on credit. Hold your Bitcoin and then sell a little Bitcoin. And hopefully, and we see it over time, maybe 0.1 Bitcoin each month will buy more and more and more. So one month you have to, your expenses cost 0.1 Bitcoin, and the next month it might be 0.09 and then 0.08 and 0.07. And what happened? Well, your dollar expenses are relatively remaining the same, or even going up, but the amount of Bitcoin that you're selling, because the price of Bitcoin has a CAGR of 20, 30, 40%, is less and less and less. So if you think in Bitcoin, if you live in Bitcoin, you have your dollar expenses, rent, electricity. These things are not going to change for a very, very long time. Grocery store, it's all in dollars. On your credit card, you get points for that too, or you get the Coinbase card, you get Bitcoin cash back. Mm-hmm. And then you sell Bitcoin to cover that, to just try to live fully in Bitcoin. Then I think that that's a way to be ahead. And ultimately, I don't know what's going to happen to the US dollar, but when it stops being the world's reserve currency, I don't think there's another governmental currency that'll replace it without a big global war, in my opinion. Hopefully it won't happen that way, but I think more and more people will adopt some form of non-governmental currency like crypto.
So, and I agree with you. Hatboy had a comment here. This has been a tough year. It's certainly a test of my resolve. I still believe in Bitcoin. So this is, and we can kind of start bouncing into, a little bit back and forth. I think there's a couple more macro things we can talk about. We can kind of start mixing this in with, meanwhile, and what you guys do with Bitcoin denominated life insurance, the whole life insurance, infinite banking, which does not work. Again, the people that have heard me talk about this on the show, I mean, you know my story, but also the people have heard it here of just me arguing with one of my buddies who's a whole life fiat insurance broker, and just like, why would I buy this? Why would I buy this in fiat? It makes no sense to do whole life and long term, because you can't do it on broken fiat. So now you can actually do it with Bitcoin. But to this point of like Hatboy, what he just said, I know there's a lot of people have been struggling in the sense of, like you just said, the fiat prices are going up, and Bitcoin's fiat price has, really just gone sideways the past year. I know people have been taking out loans and doing different stuff. So here comes
going to 125. That was nice. 126. Right. That felt really good. It felt validating to all of us. It felt right. It felt like it made sense. Right. Trump, fundamental tailwinds, the sovereign wealth funds, the ETFs, the BlackRock and Bank of America is recommending you have at least 2 to 5% of your portfolio in Bitcoin. Morgan Stanley allowing financial advisors to recommend Bitcoin to their clients for the first time ever. And the seeds that are being sown that more and more of these institutions are going to follow. Who's the big one? Vanguard never allowed any clients to have crypto, and now they finally did. I mean, just silliness out of their part to be so stubborn against you being able to do whatever you want with your own money. But if it's in the Vanguard ecosystem, you can't touch Bitcoin, but now you can. So like the more and more of these $100 billion, $1 trillion asset managers turning on Bitcoin, whether it's in the form of spot ETF, which leads to direct buying of Bitcoin or not, it made sense. And we went to 126. We peaked October 6th. And then what happened? Greed and over leverage in the economy and in the crypto economy, and a broker exchange or two was caught on the wrong side, and liquidity got zapped up. People were doing these derivatives trades that they all got liquidated. They were all basically, everyone realized, or the smart money realized, that the market was just over leveraged long right around 120, 125, and figured out a way to cause liquidations. We went on October 10th, I think it was Friday, like after every market in the world was closed except for Bitcoin, crashed from like 125 or 120 down to like 105 or 100, depending where you looked. It was October 10th, and that led to a questioning of sentiment. Right around then was when MSCI sneakily released the statement that digital asset treasury companies and MicroStrategy are going to be up for debate as to whether they'll continue to be included in the MSCI. That went way under the radar for like a month, until like November when people started to talk about it, and then it became big news, and Saylor came out defending and all that stuff, and here we are. But humanity, like human greed, like the human fallibility of we get in our own way and we get over leveraged and we cause problems in this, uh, in this sacred digital economy, this non-sovereign digital economy that we love and live by. It's part of the human condition, and I think that's led to a lot of the pain that we're suffering. So this has been a tough year. Well, 90 to 125 was not a tough year. 125 to where we are today, that's been tough to stomach because it just doesn't make sense. But if you really look at the granularity of the market structures and leverage and the players and the fact that there's whales that are colluding and the old guard of like MSCI is saying, oh, well, we should remove these Bitcoin companies. We're still in early innings.
What do you like, again, the MSCI thing, some of this stuff, it seems like, and kind of two questions here. It seems like an attack to a degree on Saylor. It seems like a lot of the banks, the legacy banks, are trying to suppress the price in essence, create a bunch of fear, panic, FUD in order to get in at lower prices. That's what it seems like on surface. And again, you're way more versed than I am. But then also, aside from that, I would love your thought just on how do you, for the last 13 years, you've seen some massive volatility being in Bitcoin. How have you stomached it? Because again, there's a lot of people that have just got in this year, the last couple of years. Like, how have you stomached that volatility and watching this whipsawing at an even greater level?
It's been an evolution. It's been long-term conviction. I'm a Bitcoin maxi. I had my moments of greed where I sold Bitcoin to buy a bunch of alts, ICOs in 2017. That didn't end well when the ICO bubble popped in 2018. This fervor in the altcoin community of you got to have Sol, you got to have ETH, you got to have ETH is the flippening of ETH to Bitcoin. Yeah, right, dude. Never going to happen in my opinion. But you temporarily buy into this stuff, and you always come back to being a Bitcoin maxi, whether you like it or not. The people that are not Bitcoin maxis, people that love Bitcoin Cash or only Sol and nothing else, and only ETH and nothing else, and only Ripple XRP, oh my God, and nothing else. It's just misguided. If these are your long-term investments that you think that are going to appreciate in price to make you wealthy or to up your portfolio's value in dollar and fiat terms, I just think it's so misguided. So the way you stomach all of this, it starts with long-term conviction. For me, it's being a Bitcoin maxi, but ultimately you have to start thinking in Bitcoin. And once you think in Bitcoin, where one Bitcoin equals one Bitcoin and there is no volatility in Bitcoin terms, then suddenly it's like an unlock. It's liberating. It's our company. Meanwhile, we're a Bitcoin denominated life insurance company. Everything we do is in Bitcoin. You look at our audited financials on our website. I encourage anyone to go, meanwhile.bm. BM is for Bermuda. We're a Bermuda-based insurance company.
Yeah, we've got a pin.
And you can see you can even pull them up, Brandon, on our website, the audited financials, because I think it's one of the coolest things out there. I'm gonna walk you through it. So I'm putting you on the spot.
All right, I got it. I was at the application part, so now I'm at the. Let me remove this. Stop sharing that.
So you go to our homepage.
Yeah.
And
all right, coming up. There we go. It's a whole thing trying to get to swap.
Yeah.
Here. Holy cow. All right, there we go.
Go to About Us. I want to say the audited financials are in About Us somewhere. Maybe scroll down for on the press.
Report, 2024 annual report.
Articles. Yeah, 2024 annual report.
That it.
And then, do you see the financials somewhere? Because what you're going to see is a table of numbers, assets and liabilities, with B's in front of each number instead of dollar signs.
Meanwhile, articles. Let me go back to.
Maybe it's for
5x.
institutions.
Let me see here. For institutions.
Yeah. Down.
Institutional insurance. Funding agreements. Reinsurance.
Yeah, all the things that an insurance company has. Oh, son of a...
Financials.
Financials. There it is.
There you go. Okay.
Yeah. And then can you see audited for 2024? Or is it down? Do you scroll down or is it on the left on that tab? What you're going to see is assets and liabilities with B's in front of each number, not dollar signs, because everything we do is in Bitcoin. When you think in Bitcoin, there's no volatility. People ask us, oh, you're going to get life insurance. What about the volatility?
This is wild.
There's no volatility because everything we do is in Bitcoin. And I can't stress that enough. And I can't emphasize how cool that is. I mean, look at it.
Yeah, it's wild.
B's in, like, how is it EY or Harrison Trotter, whoever our external auditor is, they had to get training to do this audit in Bitcoin terms, to think in Bitcoin. And it's just so liberating for anyone like me who's been in the space forever, to do this and to think this way, because suddenly volatility disappears. You think long term. Everything gets less and less expensive on an annual basis over the long term because the CAGR of Bitcoin. And it's just this incredible unlock. And I encourage everyone to try to think in Bitcoin, the Jack Mallers and Michael Saylor approach and the meanwhile approach. And so, yeah, I'll give everyone like a little overview on what our company is and what we do. Bitcoin denominated life insurance. It's just like traditional life insurance. We're whole life only, not term, except you pay your premiums in Bitcoin. Your death benefits paid out in Bitcoin. Your policy loans, because it's whole life, you could borrow against your policy tax-free in Bitcoin. So Bitcoin goes to $1 million. You can get a policy loan in Bitcoin, so not $1 million, but you're going to get some number of Bitcoin up to 90% of the surrender value. And you're going to get a new stepped up cost basis. You get the loan that day, you get the new basis. You sell that same day if you want cash or you want to diversify into something. Your cost basis equals your sale price. There's no taxable event. In the US, there's no Form 1099. You've just sold Bitcoin at a high price without paying capital gains tax because it's life insurance. And whenever you borrow from life insurance, it's always tax-free, except usually in traditional life, it's dollars in a mutual fund. And in the mutual fund is up 5, 10, 15, 30%, whatever. And you don't have to pay cap gains on that 30% appreciation. Bitcoin goes to $1 million, we're talking about 1,000% appreciation. And it's the same concept. You're not paying cap gains on the 30% appreciation. It's life insurance. You're not paying cap gains on the 1,000% appreciation. It's life insurance. It's just our functional currency is Bitcoin. And in life insurance, you never have to repay that loan. It just nets out of the death benefit. So if your death benefit's 20 Bitcoin, let's say, and you borrow 2 Bitcoin, your new death benefit's 18. You never have to repay that loan. And here's where it gets really cool. You're never at risk of a margin call. Because why? You're borrowing Bitcoin against Bitcoin collateral. You're really borrowing from yourself. You're not borrowing from an exchange, a lender, a BlockFi, a Celsius, a Voyager. You're not borrowing from anyone. You're borrowing from your beneficiaries. Your wife thought she was going to get 20 Bitcoin when you died. Sorry, hon, you're only going to get 18 because I sold 2 at $1 million each, $2 million cash that we got to buy that new house. So I hope you're okay with it. It's a really unbelievable concept when you do life insurance and infinite banking in Bitcoin. What's this comment say?
It didn't even work. It didn't even work.
There's been volatility always.
Yeah, he said, Rod just said, whenever I get discouraged, I look at the all-time chart. There's been volatility always, and it continues trending higher. So the kind of like the chart we just had a minute ago, the log chart as well, which is always what helps too, right? The network effect, and so, or the growth of the network. But I love this. I love the financials in Bitcoin because there's really not many at all that do this. I mean, I don't know.
We're the only company that ever did this.
Yeah, I'm trying to think. I thought I had seen some, but now that I'm thinking about it more, I don't think I have.
Yeah,
I do my stuff like this, so like I kind of assume in a way at times that like other people just that's how they do it too. But like I do it at a very not this level obviously, but yeah, this is unbelievable. But it goes back to the comment we had a minute ago though about the volatility and then the resolve. Like the year is tough and having resolve, but that's because people are looking at it in terms of
dollars.
Fiat. Yeah, in dollars. And
it's hard not to. Our life is in dollars. Your rent or your mortgage is in dollars. The eggs are $12 a dozen. It's hard not to. But if you could really think in Bitcoin, then suddenly things are getting cheaper, not more expensive, and it's not a tough year.
Honestly, Jason, I think this is the defining moment, I think, of really just kind of Bitcoin in general. It's been what, only 15, 16 years, but this whole reframe, the last year or two, I feel like is somewhat of a lost year or year and a half or 2 years, whatever, in terms of like the community, because so many people have been so focused on price going up and all this current event news that a lot of people are just distracted on the fundamentals and what was actually important in Bitcoin and the ethos and the freedom aspect and what you gain, like you've been saying since the beginning of the show. Just it's a money, it's a protocol outside this system, and what you get from it. It's not some trade. It's not something you're just hopping in and out of, and what you can do with all of that. And meanwhile, being such a great example, and you guys leading by example and reframing this, because again, when people zoom out and see their life priced in Bitcoin, like we had earlier, one of those screenshots of everything just going to zero, the marginal cost of utility is, when you price in Bitcoin, your life gets cheaper and cheaper and cheaper. And I think this is the reframe that we have to keep talking in these terms. Otherwise, people just you miss it. You keep thinking, like you said, in fiat. You're thinking in dollars, and you can never like break free off the Titanic. You never get in the lifeboat.
Yeah, no, 100%. And so Bitcoin life insurance is really cool because it allows you to hodl your Bitcoin for the very long term, and you get all the tax advantages and benefits of whole life insurance. Namely, you're going to get yield, which is Bitcoin yield, 2% a year in Bitcoin denominated terms. A 35-year-old healthy male, for example, 10 Bitcoin in premium pays about 18 in death benefit. How do you go from 10 to 18? How do you get 8 extra Bitcoin, 80% return on your Bitcoin?
Mm-hmm.
Well, this is life insurance. And to qualify as life insurance, you have to grow your portfolio by at least 2% per year. It's normally about 4% in mutual funds in the dollar world with all the traditional life insurers. And that they just do that by clipping coupons of like municipal debt or whatever, like 6%, giving you 4%, keeping 2% FIG for themselves. In Bitcoin, there is no municipal debt, or there are no bonds, long-term, like AAA rated bonds that you can buy that pay you 2, 3, 4%. So how do we get yield? Well, the way we do it is actually really clever, and believe it or not, carries no risk. So what we're able to do is come up with, from a very conservative and risk-averse perspective, a loan structure in the form of a 1-year repo or a repurchase agreement, where a counterparty who has low-cost basis Bitcoin is able to swap their low-cost basis Bitcoin with us for high-cost basis Bitcoin, again, in the form of a 1-year repo. As an example, let's say you're a Bitcoin miner. Perfect example of someone that we work with. Bitcoin miners, they earn revenue in Bitcoin, yet their expenses, CapEx, are in dollars or fiat. Rent is in fiat. Electricity costs to the electric company is fiat. Other expenses are in fiat. So they're earning Bitcoin revenue. They have to pay into fiat, pay out in fiat to keep the lights on, et cetera. And so what do? Well, they get fiat 2 ways because they're only earning Bitcoin. They either borrow against their ASICs with their ASICs as collateral, like 10 to 20% loans, and it's kind of expensive and hard to find. Or you just sell Bitcoin, much easier to do. The question, though, is which Bitcoin are they going to sell? Because they've been mining Bitcoin for years. They have all these different vintages of prices of Bitcoin. Bitcoin 10 years ago was a couple $100 a coin. Bitcoin 5 years ago was 20,000 a coin. Bitcoin a couple years ago, it was also 20,000 a coin, or 30 or 40,000 a coin. And so you have all these different prices, and you have to keep track of your prices because they have to pay taxes, cap gains tax, like the rest of us. And so which Bitcoin are you going to sell if you're a miner to pay your CapEx on a monthly basis? Well, I think it's pretty clear that you'd rather sell Bitcoin you mined today, yesterday, last week, last month, closer to today's market price than the Bitcoin you mined a decade ago at a couple $100 a coin, because you have to pay gains on that. You don't want to sell Bitcoin you mined at $200 at $87,000, because that is a massive gain. That's going to eat into your profit margin. You're a business after all. You have to make money. You have to maximize your money. You have to minimize your taxable liability. And so what do you do with all that low cost basis Bitcoin if you still haven't quite done something or used it yet? Well, the answer is, out of fear of incurring a taxable event, you don't do anything. Because if you incur that taxable event, then suddenly you're really eating into that profit margin. So all that low cost basis Bitcoin by miners, it's just sitting there. They haven't done anything with it. It's not earning anything, and they don't want to create a taxable event. Well, until the life insurance company in Bitcoin rolled around. Meanwhile, where our liabilities are so long dated, think about it. We have 20-year-olds with policies. They're not going to pass away for 70 years. And so we have long liabilities. So we have to match those long liabilities with long-term assets. And one such loan structure, like I've been saying, is this 1-year repo that you can roll up to 5 years or more. And the way it works is this. You're a miner. You have low-cost basis, 100 low-cost basis Bitcoin. You lend to Meanwhile, we lend you back 100 Bitcoin, except in the form of a 1-year repurchase, this fixed income debt instrument. The Bitcoin we lend back to you assumes today's cost basis. So you immediately sell that Bitcoin for all your CapEx needs. At the end of 1 year, you can either repay the loan, except we charge 3.5% interest rate. So mechanically, you send us 100 Bitcoin, we send you back 96.5 Bitcoin. That's the 3.5% Bitcoin interest rate. And that 96.5 you immediately sell. At the end of the year, you either repay back and get back the 96.5 low cost basis Bitcoin that we keep safely for you at our custodians, Coinbase and Anchorage, or you can just roll to the next year, keep that loan outstanding, not repay, not get your low cost basis back, and just pay us another 3.5%. And then do it on year 3, 3.5%, year 4 to 3.5%. Way cheaper than paying north of 20% cap gains when you sell those 100 low cost basis Bitcoin out in the open market. And so what do we get out of it, the life insurance company? Because the miner, they get to utilize their low cost basis Bitcoin for the first time ever without paying taxes, just paying 3.5% on an annual basis. What we get out of it is 3.5% interest rate, of which we pass 2% on to all of our policyholders and all of our investors that want 2%. And it's a fully collateralized loan, so there's no counterparty credit risk. Meaning, if our counterparty, the miner in this example, disappears, goes bankrupt, doesn't pay back the loan, you name it, nothing happens to us, because don't forget, we have all 100 low-cost basis Bitcoin of theirs. They only have 96.5 of our Bitcoin. So we have that extra 3.5. And so we have that buffer. It's a fully collateralized loan. You can almost think of it as an over-collateralized loan. And therefore, we got 3.5% yield, taking no counterparty or no credit risk. The only risk is to our custodian, Coinbase and Anchorage, like the two best custodians on the planet in terms of regulatory licensing and jurisdictional operations. They're both trust companies, so they're federally chartered trust companies under the OCC. They're cybersecurity companies. I mean, your Bitcoin's as safe as possibly can be at Coinbase and at Anchorage. And so it's this unbelievable unlock for miners to utilize the low-cost basis Bitcoin for the first time ever without paying taxes, and for us to get 3.5% yield on our Bitcoin, 3.5% interest rate in Bitcoin terms, and pass 2% on to all of our investors and policyholders. And so that's how we get yield. We're not loaning it out to the Celsiuses and Voyagers of the world. We never will. And so it's twofold, this yield, this product. One, that's how we get yield for our policyholders. But two, we have what's called a guaranteed investment contract, or a GIC for short, which is basically a life insurance version of a CD, or certificate of deposit, where you can be a DAT or anyone with Bitcoin that you want, hey, I want 2% yield in Bitcoin terms. I'm going to invest through Meanwhile. I'm going to give them my Bitcoin. They're going to go and do this trade with getting yield, and they're going to turn my 100 Bitcoin into 102 Bitcoin at the end of the year. Which, by the way, 2% doesn't sound great, but in Bitcoin terms, it's awesome, because if you believe in Bitcoin and you believe the dollar price of Bitcoin is going to go up over time, then 2% in Bitcoin terms, dollarized with the average CAGR of Bitcoin, can be orders of magnitude higher in dollar terms when the price of Bitcoin goes up. So it's a pretty amazing product that we created to get yield without taking any risk. We love it. Our investors love it. And I think it's a very important point to always address with anyone listening about Meanwhile and how we operate for the first time, because the question is always like, all right, how do you get the yield? And this is how, and there's no risk, and it's pretty amazing.
Yeah, it is always the very first question, for sure. What we have another comment. It says, if I want 10 Bitcoin as a death benefit, what does that What does that look like to set up, and
Yeah,
what is the monthly Bitcoin cost?
awesome. Um, so the way it works is this. With traditional life insurance, you go to a carrier and say, I want this death benefit, $1 million or 10 Bitcoin. And they'll say, great, they'll crunch numbers based on your age, health, sex, smoking status, and they'll dictate to you an amount of premium that you have to pay every month or every year in fiat. In whole life, it goes into that mutual fund. We already talked about that. Well, we can't do that in Bitcoin. Why? Because the difference between fiat and Bitcoin is that Bitcoin's scarce and fiat is unlimited. And so we can't tell you how much Bitcoin to pay in premium because you're asking for 10 Bitcoin in death benefit. That means we have to tell you how much Bitcoin in premium you have to pay. But I don't know how much Bitcoin you have. What if I said you have to pay 5 Bitcoin in premium? You might say, what are you talking about? I only have 4 Bitcoin. So we had to flip the whole concept, the whole script upside down. You come to us, instead of asking for coverage, you come to us with an amount of Bitcoin that you know you have, that you want to use as premium. And you say, what do I get with this? How does it work? Well, our premiums are always going to be paid over 10 years in equal annual installments, not monthly, but annually. You choose your premium. So this guy, MMG_Hatboy, you might have 5 Bitcoin to your name that you know you have in custody. And you say, hey, I have 5 Bitcoin. What do I get for it? Well, we will then crunch numbers based on your age, health, sex, and smoking status and give you a death benefit ratio that you get relative to that amount of premium. If you're a 30-year-old, 5 Bitcoin in premium might give you 10 Bitcoin in death benefit. If you're 35, 5 Bitcoin might give you 9 Bitcoin in death benefit. I don't know. The older you are, the smaller the ratio is because you're older or health complications closer to death. We're all going to die. We insure people between ages 18 and 65. If you're older than 65 and you have Bitcoin, you might say, damn it, I want a policy, but I'm too old. Well, you can own a policy on a family member that's younger and that qualifies. Maybe you have a son or daughter. Maybe you have a grandkid that's around 18 or whatever. You can own a policy on them and you pay the premiums and you have access as the owner to those tax-free policy loans. And so I can't answer your question, MMG Hatboy, but if you tell me your age and how much Bitcoin you'd want to see as an example, I can give you a death benefit ratio relative to that. But wrap it all up, your Bitcoin premium is paid annually in equal annual installments. So if we say that for 10 Bitcoin death benefit, your 30 and 5 Bitcoin in premium is what does it. Well, you're going to pay that 5 Bitcoin over 10 years annually, meaning you're going to pay 0.5 Bitcoin per year every year for 10 years, regardless of the price of Bitcoin. 0.5 a year every year, doesn't matter what the price is, because we're thinking in Bitcoin here. Now you might say, well, what if Bitcoin goes to $1 million? And today 0.5 Bitcoin is $40,000. In a couple of years, 0.5 Bitcoin might be $500,000. That's crazy. Well, yeah, it is crazy if you think in dollars. But if you think in dollars, don't forget that your death benefit, which is 10 Bitcoin, today is 800K. At $1 million, 10 Bitcoin is a lot more than 800K. So while your premiums might go up with the price of Bitcoin appreciating, so does your death benefit, and so does your ability to borrow in dollar terms, by borrowing Bitcoin and selling it. So everything is pari passu in Bitcoin when the price of Bitcoin goes up or down, because your premiums go up lockstep with your death benefit. And when the price of Bitcoin goes down, premiums get cheaper, but your death benefit gets worse in dollar terms. So you got to think in Bitcoin.
Yeah, that was again my follow up actually question to that was what happens with these fiat, when it whipsaws up and then when it comes down. If
nothing
Bitcoin,
nothing happens. We're thinking in Bitcoin now.
Yeah, that's amazing. That's incredible. You talked about the guaranteed investment contract, the GIC, the repo agreement, which is
so there's sort of like 3 products here to really think about.
Yeah.
One is the whole life product. It's just a long-term place to store your Bitcoin. By getting a whole life, you get yield that grows your Bitcoin tax-free. You get the tax-free policy loans, the ability to sell Bitcoin up to 90% of your surrender value tax-free. And then the death benefit component, it is life insurance after all. This is a way for your Bitcoin to outlive you. You have your Bitcoin self-custody and you get hit by a bus tomorrow. Do your loved ones know how to access your Bitcoin, where that ledger or whatever is, uh, safe combination, the safety deposit, how to use a ledger, the PIN code for the ledger, the seed phrase, private keys, backups, et cetera, et cetera? Are they even crypto savvy enough to plug in that ledger and use it and move your Bitcoin on the blockchain and sell it for dollars if that's what they need because they're not as crypto savvy as you? Or is your Bitcoin going to die with you? As a lot of us know, it's an estimated 15 to 20% of all Bitcoin ever mined has permanently been lost forever due to user error. Computers burning out, tossing computers out, losing ledgers, whatever it might be. And so I have a wife and young kids. The reason I got my own policy before I even joined the company over a year ago was the fact that I'm a libertarian, a conservative libertarian. I believe in self-custody. That is the core invention of Bitcoin, after all, the ability to be your own bank, to self-custody digital assets without asking for an intermediary like a bank to move your dollars in a wire and take some fees in the middle. So to give up your Bitcoin into third-party custody, Coinbase, and Anchorage, you have to be okay with that. But what are the benefits? Well, Bitcoin's going to outlive you. You get hit by a bus tomorrow. All your beneficiaries need to know is not what to do with the ledger and the safe and all the PIN codes and the private keys. It's reach out to Meanwhile, say, hey, I'm the beneficiary. This insured person passed away. I'm going to file a claim. And Meanwhile will handhold you from a concierge and white glove perspective through the entire process of receiving the assets, which, by the way, the Bitcoin receives a new cost basis upon death. So it's almost always going to be a stepped up cost basis if the price of Bitcoin goes up. And so you don't have to know how to use Bitcoin. You don't have to train your spouse or whoever it might be on what to do and how to, and if you die and on where to go and who to call or whatever. You just have to file a claim with the life insurance company and we'll give you the assets tax free.
Hatboy looks like I had a follow up on that. Just said, I think I understand. Mid 50s, say I allocate 1 Bitcoin for this example.
Yeah, mid 50s. So it's probably 1 Bitcoin in premium. So it'd be 0.1 a year. I'd have to do this in front of my computer with our model, our insurance models, but don't quote me 1.2, 1.25 Bitcoin. So like a 20-25% return maybe on your Bitcoin in terms of the death benefit ratio. But again, I have to actually run the numbers. And I'd have to know exactly how old you are. And also, this depends on your health. Like you might be mid 50s, but if you have a terminal illness, we're not going to underwrite you. If you're tip top shape, then we will. And so it depends on factors like that. But generally speaking, the closer you are to 65, the closer the death benefit ratio is to like 0. And 18-year-olds, like an 18-year-old female, for example, it's a 2.5x. So 1 Bitcoin in premium would be 2.5 Bitcoin in death benefit if you have like an 18-year-old daughter, for example, whoever this guy is. And so you can always, there's 3 parties to every life insurance contract. There's the owner, the insured, and the beneficiary. The owner can be anyone or a trust or an entity. It's your responsibility for paying the premium, and you have access to the policy loans. Then the insured, single human life between 18 and 65. The younger and healthier you are, the bigger the death benefit. And finally, the beneficiaries can be a person, a group of people in ratios, any equal splits, all your kids in equal splits. It could be a trust. It can be an entity. Same with the owner. It can be a trust, an entity, and a person. And so the beneficiary, they just file the claim when the insured passes away and they receive the assets. So there's a lot to think about. Feel free to reach out to me, MMG Hatboy, and I'm happy to talk at length about answer your questions if that's something that'll be useful for you. Maybe Brandon could put my email address or something in the chat for everyone.
Yeah, I'll throw something in here. I was just working on just tweeted this out too, so I'll put it on my Twitter timeline and tagged you, Jason, so that way for those who are following me, I just was working on a tweet. That's why I have my head down the last couple of minutes with tagging Jason. Meanwhile, and in the live we're doing right now. So I'll try to put something in the chat here as well. Obviously, it's in the description too. So we'll have it in a bunch of places. That way, people can reach out to you as well.
Great.
So that'll be.
Yeah, and I would say A lot of people don't really think about this as life insurance as much. Like, it's not like you wake up saying, I need some life insurance today. There's that
Right.
age-old saying, life insurance is never bought, it's sold. This is not traditional life insurance. This is the way I thought about it personally before I bought a policy. I already had term life, and I still have term life in dollars, and it's cheap and expensive. Whole life in dollars is very expensive. I did not want whole life at 4% growth rate in the mutual fund.
Yeah.
I could beat 4% with my eyes closed.
Yeah.
Maybe not this year if I'm all in Bitcoin, but I'm not all in Bitcoin. But nonetheless, I think about this as a long-term safe place to store my Bitcoin that gives me yield. My Bitcoin will grow tax-free. That gives me the ability to get policy loans, so to monetize and sell my Bitcoin tax-free. And that allows my Bitcoin to outlive me, to pass on to my family more Bitcoin than I even had to begin with, tax-free. So this is this just unbelievable, elegant product that is the true HODL product that gives you all those additional tax advantage benefits that happens to take the form of life insurance. So everyone out there, you might not need or want life insurance. And I implore you to think like I did, which is just a great place to hold your Bitcoin for the long term that happens to take the form of life insurance.
Yeah. Yep. I would love for you to. I think we might have talked about this on our podcast we recorded, last month or whatever it was. But what the wealthy, obviously, in the last, whatever, a few hundred years, this has been the strategy, just the whole life insurance and just the infinite banking concept. All this goes back to, like, even the banks right now in general. Like, they have whole life insurance policies. That it's not like JP Morgan Chase has, like, oh, I'm going to take out a bank account in my own bank. No, they have whole life, or they have insurance policies. Like, that's how they operate. And this is, I would love just some context or history in that regard, of, like, why is it that this has been, because, like, you
Brandon, your internet is frazzled and you got cut out.
that boy said, I'll reach out. Thank you. Yeah, and I'll send that info too here in a second, Halfboy. But
Brandon, your internet cut out for a
anyway,
second there. What?
so I would love just just a quick thought on just some of the history, the context of, like, life insurance as well, because this is what the wealthy have been using for hundreds of years in order
Yeah,
to do this the very thing.
hundreds of years.
Yeah. So
So we're a Bermuda-based life insurance carrier, like so many insurance companies. So we're offshore. And what life insurance has been for so many people, the wealthy people, for hundreds of years, is a place to put your Bitcoin. Generally, you own, or the beneficiary is a trust, some type of revocable or irrevocable trust, or an irrevocable life insurance trust, an ILET, all these different dynastic trusts, all these different trust structures to protect assets from probate. Basically, the point of life insurance and the point of what the wealthy use life insurance for is twofold. One is to pass on assets with the minimal or zero tax liability or implication to the next generation, to preserve their family's legacy and wealth, to go to the next generation without the government taking a dime. Two is more from, like, the infinite banking perspective, is the ability to get not leverage, but the ability to monetize assets tax-free in the form of policy loans
control.
from life insurance products by, there's something called PPLI, private placement life insurance, where you can have, custom bespoke structures where you put, assets like securities or commodities or real estate or yachts or whatever as the collateral, as the assets inside life insurance, and you're able to borrow against them to monetize these assets. And remember, everything in life insurance is tax advantage. So the point from that perspective, and the point of infinite banking, is to minimize your taxable liability, to essentially be your own banker. And so the wealthiest pay these expensive premiums because they can afford it. But what you get is reduced, tax advantage structures to reduce your tax liability, and ultimately to pass it on to the next generation or to those you care about. And oftentimes the philanthropic have charities that they work with as beneficiaries. And there's something called donor advised funds, DAFs, where you can set up a life insurance structure and name charities as the beneficiaries or partial beneficiaries, and you get a lot of tax advantage write-offs from that. And so there's a lot of different ways to utilize life insurance to preserve wealth, to minimize your tax liability, to be philanthropic, and yeah, it's just the thing about whole life relative to term is it's so much more expensive. And in dollars, inflation eats at a lot of the benefits too. But when you do whole life in Bitcoin and you choose your own premium, because you're not being told how much to pay every month or every year, but you get to choose, hey, I want to do 5 Bitcoin premium. Actually, I'm changing my mind, I'll do 4 Bitcoin premium. Because you're choosing, you're minimizing how much you're going to spend on this life insurance policy. And you are in control. Meanwhile empowers you to be in control, to minimize your counterparty risk and maximize your tax advantage structure around your Bitcoin. And so it's a pretty cool way to evolve life insurance by allowing life insurance to come into the Bitcoin arena, into the Bitcoin industry.
Yep, I put Jason's email in there, Hatboy, and then anyone else that's seeing this, obviously. So Jason's email is in there. I put the link. So I reached out to it again. I've told these guys before too. Like all this, we partner with. Meanwhile, I love life insurance. Again, I'm not going to go into my diatribe of me fighting with my buddy about life insurance in the fiat world, but I love this concept. And we live in the two worlds as Bitcoiners. Like the whole show has been about we have to live in this fiat world that we're currently in, but also living simultaneously in this Bitcoin world. And it's just, that's the way of the world. And again, eventually, hopefully we'll never have to live in this fiat world at some point in life. But for right now, the Bitcoiners, we do. We're juggling these two worlds. So it's important. I reached out to, meanwhile, I reached out, all the sponsors that we have on this show and partners are people that I've reached out to. Like Jason didn't come to me. My point is, I wanted to go find good people that were Bitcoiners, had the ethos, freedom mindset. They were, wanted self-custody, all these things, all these companies and products and services are that. So, I pinned the referral link for our show. If people want to support the show, do it through that link. If not, you just want to reach out to Jason, do that too. And I put his email.
The referral link is where everyone's going to ultimately end up. It's how you sign up for policy. Everything with us, by the way, is online. You do not have to visit a doctor to submit blood or urine or get a physical. That referral link is just to apply, and there's no requirements or obligations once you apply. It just gets the application started. Once you click on that link, you'll be able to play with a slider to see how much Bitcoin you want based on your age, assuming you're healthy, what the death benefit ratio will be. So I encourage everyone just to play with it. Click on the link. You'll type in your age and you play with how much Bitcoin you'd want to use as premium, and you'll see that death benefit will get higher and lower based on that premium amount, based on your age, et cetera. And so you'll see the available loan amount after year 2, how much you could borrow in Bitcoin. You have your own mental models as to where the price of Bitcoin will be in time. Maybe you think in $1 million in 5 years. And so you see that available loan amount at year 5 is 0.9 Bitcoin, and $1 million a coin, tax-free 0.9 Bitcoin, 900K. I mean, hypotheticals, but that's how you play with it. That's the mental model that you can start going through in that exercise. But you can only access the slider and those tools by clicking on that link that Brandon posted.
Yeah, and it's fun. I mean, I got mine going. I'm working on mine. It's fun to play with the slider, just do all that stuff. And like you said, it's super easy. It's all online. It's super easy. And again, it's, again, everyone to each their own, but Jason and his team did not come to me and be like, hey, you guys have a big podcast and we're we want to partner with you. It was, me reaching out and my team reaching out to these guys, because we want to be partnered with good people. So, do you have any other, do you have any thoughts? I meant to ask you this earlier, so I'm going to really, kind of hard tangent for a second, but just like the Fed, because I said we were going to talk about this and we didn't. We never got to it in the beginning. And the Fed and just the rates and things that are going on, and just the interest on the debt that keeps growing, who might be the next Fed head, things of that nature. What are your thoughts just there, just overall with where we have to be? Because again, I thought we were gonna have to lower rates sooner. if you would have told me 2 years or whatever it was, 2 or 3 years ago, that they would have been able to keep rates this high for this long, I would have been blown away. And
Me
here we
too.
are. So yeah, it's what are your thoughts just going ahead here
It's
with the Fed and
part of the MMT experiment too, is like the fact that rates are as high as they are, mortgages are as high as they are and expensive as they are. Banks don't want to lend to anyone, give mortgages, like just tightened credit, even though the Federal Reserve, the Treasury, and the government is trying to loosen up credit and allow for more spending and credit for the banks to loan money to stimulate the economy. The height in which rates are currently means that the U.S. government is spending so much money just to service the interest on the outstanding debt. It is mind-boggling. I didn't think it was possible for rates to be this high for this long. I think the Fed is going to have to cut rates. Trump is going to force the Fed, and whoever the next chairman is going to be, someone who Trump has handpicked, and they're going to cut rates. They have to come down. The interest, the amount the U.S. government has to pay on an annual basis just to service the interest on the debt has to come down. Mortgages hopefully will come down. Mortgage rates will come down to make it more affordable for people to buy homes. When rates come down, it's good for equities. It's good for the stock market. It's good for risk assets. It's good for Bitcoin. And it allows for more affordability of things in general. It may spur inflation, but inflation's already here at these level of rates. Raising rates is not going to help anyone. It's going to make people poorer. It's going to make it more expensive. It's going to cause younger generations to forced into renting forever. They'll never be able to afford a home because they can't afford 7-8% mortgages. And that has to change. It's for decades and decades, wage inflation was something that kept in line with general like CPI inflation, the prices of goods going up. But for the first time in so long, basically since 2008, wages have not gone up with the price of everything else. It is still, kids are graduating from Harvard with like 70K salaries. They can't afford the student debt if they have outstanding loans. They can't afford to live in any of the coastal cities and pay rent, or, coffee's $10. like, yeah, make your own coffee, fine, whatever. Like, eat ramen. But like, you graduate from Harvard or wherever, or just any decent school with a decent education, and decent experience, and like you're driven and not an entitled brat. You should be able to get a job that pays you a salary that's, in line with the cost of living. And it seems like starting salaries are still like 60, 70, 80K on the high level, unless you're a lawyer having spent 7-8 years or whatever it is in college and racking up student debt. So the problem to me, beyond just general inflation, is the fact that wage inflation has not kept up with the price of goods, and that to me, it makes people poorer, because like if the wages are going up and the price of everything else is going up, then like there's more parallels that can make sense, but people are just getting poorer and poorer and poorer. They're being forced to rent for longer and longer and longer, not build any equity, and it's just tough. I think the Fed has to cut. I think mortgages have to come down. I think they have to spur markets to continue on upward trajectories. People have to just generally feel wealthier, and sending out like $1,000 checks. I live in Miami. I used to live in New York. Like $1,400 checks, whatever it is. It sounds great for a lot of America, but like it really doesn't move the needle on an annual basis for a lot of people, like the majority of the country in the coastal cities, because the price of living, the cost of living, cost of goods is so expensive. I have a family of 4. We live in Miami. We go to the grocery store. It's $250 a week, every week, at like Publix. I'm not going to Whole Foods to spend that. I'm just like at like the generic grocery store, feeding a family of 4 with, protein, dairy, eggs, whatever. And, the yogurts for the kids because they love that. I try to be healthy, but it's like $250 a week, every week, no matter what. And that's just what it is. And that's $1,000 a month right there, every month. And so it's just so expensive uh, living. And like I said, wages haven't adjusted because credit is not flowing easily. And so the big financial institutions are not, raising wages to pay, their employees, and money's just not flowing through the financial plumbing the way it used to. And it's tough. It's tough out there.
It is truly a wild time right now, and I think 2026 is going to be very interesting. Let's just say that.
Hopefully it's going to be a great year for Bitcoin and the economy and
two green, one
yeah,
red, one green, right? I mean, there we go. So one Bitcoin is one Bitcoin, though. So
that's right.
denominate your life in Bitcoin. Anything else you want to cover quick before we wrap? We've already been going for an hour and 15, which I just realized. I was like, holy cow, I feel like we just got started a little bit ago. But and we'll have to do this, again, like we talked about doing this every, 2 or 3 weeks, or once a month or whatever it
Yeah,
is.
once a
But
month is a great cadence.
yeah, just talking shop.
No, I love it. I'm happy to talk to anyone if they reach out to me about, meanwhile, and what we do and just anything. Um, I love coming on here and talking to you because you're one of the few that gets it. You really get it. And so
Thank you.
it's you get infinite banking, you get how to maximize your wealth, you get how to minimize your tax liability, you get Bitcoin, of course, and just like global macro in general. And I love jamming on all that. So always happy to keep it going.
Same. Well, awesome stuff. We have the link obviously here to go fill things out. Jason's email is here on the screen, so I'll put those will be in the description as well. Just yeah, man, appreciate you a ton. Look forward to doing this each month and just jamming a bunch of macro stuff, and we can touch on stuff here. I know it's Christmas time, so it's a little bit crazy with just with people getting on and off. But after the new year, like I said, in January, we'll hop on, have a bunch of
Great.
people jamming, and it'll be fun. So. Yeah. Appreciate you. Appreciate everything you guys are doing and setting the standard.
Right.
I mean, really, like between the balance sheet and what we were showing, just everything denominated in Bitcoin and what you guys are building, it's truly the reframe that a lot of Bitcoiners, again, we need to start.
Yeah, I mean, that's the thing, and I didn't even mention it, but like the fact that our company is fully denominated in Bitcoin, that we're on the Bitcoin standard, where Bitcoins are functional currency, that's what enables all these tax advantages of life insurance to apply to your Bitcoin. There's no dollarization. We don't have any realization. We don't index to the dollar. Because of that, we minimize down to zero any taxable event with your Bitcoin. And so that's the key to how our company operates. And why hasn't Northwestern Mutual, one of our biggest investors and backers, and any of these big life insurance companies, just spun up a little division that does Bitcoin life insurance? Because they're all dollar-based companies. They would have to start a brand new company from square one, get regulatory approval, get licensing, all in Bitcoin in order to do what we do. And that takes years and resources and a lot. And proving to the regulators that you could do what we did. I mean, we were in the regulatory sandbox in Bermuda for a year to prove to them that we are adults in the room, that we are professionals, that we're conservative and risk averse and responsible, that we're dotting our I's and crossing our T's and KYC, AML, and the whole thing. And so that's what it takes. You can't just, life insurance companies can't just spin this up at a moment's notice. So yeah, the Bitcoin standard is key to everything.
I think that might be a good topic as well. We'll come up with a good list of just whatever macro stuff, current events of the day. We'll jam on, but a month from now, mid-January, we'll do this again. I think that's a good thing to talk about, which is the speed at which, because again, this is where the patience things comes in, and the resolve and all these things that all of us, because we're human, want these things overnight. And it just doesn't work that way. I mean, we can see how slow moving a lot of life is. And like, I think a lot of Bitcoiners, we just think like, well, what do you mean? Just like destroy this thing over here and like rebuild it over here. It'll take like a day, right? Or maybe a week. Like, so I think this is like this cognitive dissonance that we tend to have, which a lot of Bitcoiners tend to be younger, maybe under 40, under 45, 50 or whatever it is. And, but our channel is 35 to 65 year olds. But I think we have a lot of young 50, 60, and 70-year-olds watching this channel as well. And I think all of us, we just tend to think like, well, this can just happen overnight, right? Like we can just do things.
I
Which,
used to think that Bitcoin adoption was going to happen overnight when I bought it in 2013. One of the appeals, and I was trying to convince people back on the trading floor at TD Securities, where I was on Wall Street, was things go viral. Look at YouTube videos. Look at like Gangnam Style and all this stuff. Like things go viral like this. And this is digital money. It'll go viral like this. Like, no, like this is like I used to do this all the time, but like this is our brain. And in order to understand Bitcoin, your brain has to like reshape and like recalibrate and rewire, because everything's in dollars. And to have a new store of value that's digital and that was not created by backed by any government or army or military, and that's a good thing. Convince people that's a good thing, that we don't know the creator. Really good thing that there's no governments involved. Really good thing, like to convince people that like it's not happening overnight. It's slow, like suddenly, like when you get it, like something changes. Like the light bulb goes off. Like you're permanently changed. Like you're orange pilled, and you see the world differently. And that does not happen overnight. As digital as crypto is, the adoption does not happen overnight. It takes adults in the room. It takes people speaking different languages on the same topic to ultimately make something click for each and every one of us, to realize, be like, oh, it wasn't explained to me like that. But now you did it. You finally, like, the light bulb went off. And I get it now. And that is a long-term process of, how to just wake people up to the evolution of things in the digital world.
So true. Last question here. I had one last one before we roll out. Is private equity supporting your build out? So touching on investors. You mentioned Northwest Mutual, so that's
well, yes, no. I mean, I would say we're mainly venture capital funded, but Apollo is on our cap table. Bain is on our cap table. But mostly, I would say it's think of it as a VC funded life insurance carrier.
In time. And I would love to, like I said, I think in a month from now, this would be a great thing to talk about. Just this whole thing, like these two worlds, because I think this is something I've been dealing with, the idealism versus pragmatism. Like you said, you and Pierre Rochard are the two people that I've interviewed over the last year or two that have said this thing of like, because you guys got in at the same time, and it was like, I thought people are gonna get this overnight. Like this is obvious. Like, look, just logic, math, or whatever. And then like cutscene, here we are, 13 years later.
It's like, in 2013, I was like, oh, this is like the invention of attaching money to an email. You can attach photos to an email, send it instantly around the world for free, anywhere, videos, text, links, and now money. The only catch is that it's not dollars, it's new money. And I was like, oh, you can attach money to an email. Like, that makes all the sense in the world. That was the analogy I used to use. People are like, yeah, that makes sense. But like the catch is that it's like a money you've never heard of. And now I have to explain it to you and all the intricacies and background. And that's what makes it slower.
And oh, by the way, all the existing players in the system, because it is slow, they're not necessarily loving that, because it does, the thing too, and again, we can get into this, but the thing that is tough, because this is this cognitive dissonance where the governments, a lot of Bitcoiners like, it's going to defund government, all this stuff. It's like government's a group of people though, and it's like those people inside the government benefit as well by being on a Bitcoin standard, and that's like this thing that doesn't get talked about very much, which again, we can extrapolate more on as we go. But the people inside the government that work in government are people, and they have families. They are human, believe it or not, and so they will benefit by being on a Bitcoin standard, even if the government itself, the entity, doesn't have as much power. The people inside that government and then the people outside the government will gain more autonomy and power in their own lives. That's the thing that doesn't get talked about very often.
Yeah.
So
exactly.
Amazing. Appreciate you, Jason. Have an awesome weekend. You, everybody.
Likewise. Merry Christmas. Happy Hanukkah. Christmas, yes. Happy holidays to everyone. Happy New Year.
New Year's, everything. Yeah. So appreciate you. And then, for you guys, Jason's email is there. The link is pinned in there. Check the description out as well. Thank you for supporting the show, supporting yourself by talking to Jason, and we will see you guys on the next one tomorrow. So
awesome.
Thanks, guys.